other than just the outlook of the economy and the outlook of the company, there are still many factors that can affect the markets. Now, I want to share with you two more points on the markets. First, negative news in another country can also affect stock markets around the world. So as more and more countries are linked to other countries around the world through trade or other economic factors, any news, be it in the form of positive news or negative news, will affect stock markets around the world. Now for the second point, news already priced in to the markets. Sometimes when certain news are released, the impact from the news is not very strong because the market has already priced in the news. So priced in, what does this mean? Well, it means that the market has already reacted to the news as if it were true and that the event has already took place. Let's consider an example to better understand this. Now suppose the government released a statement saying that they are considering to spend heavily on infrastructure over the next few years. So for the next few months, whenever there are any reports from government officials or reputable news outlets saying that, oh, the spending is 50% confirmed and it promises to be one of the biggest areas that the government will spend its budget on. How do you think the market will react when they hear this news? Well, the market will react to these talks and reports, and the stock prices of infrastructure companies will rise in anticipation of the demand for their services. So this is the market reacting to the signs and pricing in the news. So when the actual plan from the government is released, the impact of the plan will not be so significant as the market will have already priced in and reacted to the news. Of course, ultimately, the reaction from the market is dependent on whether the news is in line with market expectations. So for example, if the expectation was for the government to spend $1 billion on infrastructure, but the actual sum released from the government is only 500 million, the stock prices of infrastructure companies will fall because this news is not up to market expectations. Okay, so now the summary of lesson 2. We've seen how supply and demand is the basic factor that drives the market, and it is influenced by news regarding the outlook of the company and the outlook of the economy. A positive outlook will bring investors and stock prices will rise, whereas for a negative outlook, investors will leave and stock prices will fall. In the event of unexpected news, they can usually cause a big jump in prices depending on if the news is bullish or bearish. And sometimes the impact from certain news will not be so strong because the market would have already priced in and reacted to this news. So this is all for lesson 2, and for the next lesson, we will be looking at the different kinds of charts and how to read them.
Subscribe for more content.